everyone, and welcome to Market Fatafat with me, Arvind. This Monday morning, the markets are looking quite tempered, 10,500 on the screens, with the broader end of the market seeing deep gashes. In fact, the small cap index is now down 1%. But this is the show where we fill you in with all of the top ideas to watch out for, which are the stocks in news, what is standing out on the charts. We'll get you a dose of just that, and for that, our team of research analysts are all standing by. We have Samit Chavan joining in on the technicals, as well as Kunal Bothra. Well, let's get started then with the first stock that's in the news, and one that's having a fairly strong session despite the rest of the choppiness in the market, and that's Airtel, up a good 2%. Tell us, Mubina, what's the trigger?
Well, I would say it's not just Bharti Airtel that's witnessing an uptick today in trade. It's also Vodafone Idea that is seeing some buying coming in. Do remember that for Bharti Airtel, there is that additional news trigger with respect to Airtel Africa. IPO work IPO is in the works currently for that unit, and now essentially things have progressed on that front. What we do understand is that Airtel Africa has appointed merchant bankers for its IPO. We're talking about like JP Morgan and Citigroup that has been appointed by them. 8 banks have been appointed for the IPO. BofA, Merrill Lynch, ABSA Group, Barclays are some of the other names. Do remember that following the recent subscription of shares in Airtel Africa by 6 global investors like Warburg Pincus, Temasek, Singtel, etc., there's an aggregate consideration of $1.25 billion. So progress on that front may be an additional trigger for Bharti Airtel to rise in trade.
All right, that is certainly keeping the stock quite upbeat, 2% and counting on Bharti Airtel. Moving right on, let's flag off some more stocks then, and this one that is under pressure, quite decisively so, is Granules India, close to the lowest point of the trading day. Kunal, what's your take?
So for this is the third straight week where the stock is correcting, Avan from 105 levels to now sub 90. Now, on the short-term charts as well as on the weekly time frame charts, it's on the verge of a break of a key support, which was around this 88 odd mark on spot levels. I believe that with this 3 weeks of continued weakness for Granules and the fact that it's coming very close to its key support, I believe the breakdown could happen for the stock in this week itself, and you could see the stock grinding towards almost 80-82 levels. So Granules could be a good shorting opportunity at current levels. Targets at around 82 and stoppers could be kept at 94.
That's Granules for you. The weakness could perhaps persist. Moving right on then, let's talk a little bit about Bajaj Finance, and Vivek, there's multiple triggers that's keeping this one in news.
Well, that's right. Number one is going to be a new entrant as far as the Sensex is concerned. The BSE Sensex is now going to include Bajaj Finance with effect from 24th of December. Remember, not too many ETFs linked as far as the Sensex is concerned, which is why I'm not seeing too much of an uptick today. But more importantly, given the entire news flow around the NBFC space, Jefferies today has come out with a note, and they're quite confident that given the fact that the liquidity squeeze that we saw in the last 2 months is easing slightly, and they believe that even though the funding environment is something that is expected to stay tight, they believe Bajaj Finance is reasonably well equipped to deal with the choppiness seen as far as this particular market is concerned.
All right, watch out for Bajaj Finance. That's the take coming in from Jefferies as well as the Sensex changes. Moving right on then, let's pull up Yes Bank, that's in focus today. In fact, a rough session today as well, 5% down. It's down for the second consecutive day on the trot, and in the last 5 trading days, it's lost out something like 9 to 10%. It's one of the top drags on the frontline index as well as on the Nifty Bank, and the stock is trading below all of its key daily moving averages. In fact, analysts say that the consensus price target is at about 45% higher than the CMP, and the volumes are about 67 times the 20-day average. 185, that's Yes Bank for you. Moving right on then, let's pull up Adani Power in trade, and that one is flexing its muscles. Samit, let's understand what exactly the stock is doing in terms of its move. Where is it headed from the current 50 levels?
Clearly this has been one of the outperforming stocks since last 1.5 months. The stock is clearly continuing its strong run. Looking at the daily chart, after a consolidation of nearly 2 weeks, the stock has now resumed its uptrend, and quite soon we would expect the stock surpassing its recent high of 51.52. So clearly the stock is heading higher. Now 46 would act as a very strong support, and from here on we won't be surprised to see this stock extending its rally towards 55-56 over the next few days.
All right, watch out for Adani Power. That's nearly nudging a level of 50. Meantime, Indoco Remedies is a stock that's in news today. Mubina, let's talk a little bit about what's driving this solid move.
Well, it's not just today, but even on Thursday's trading session where we did see quite a strong up move coming in the stock price. Of course, for Thursday, the trigger was with respect to the pharmaceutical company saying that the US health regulator, or the US FDA, has cleared the inspection of its all-important Goa plant 2 and 3 with 2 minor observations. Remember, the inspection was done between the 14th to the 21st of November. There are 2 observations, none of them are repeat in nature. So just in the last 2 trading sessions, this stock price, including of course today's trading session, the stock of this company has rallied a neat 38%.
Alright, keep an eye out. That's Indoco, which is nicely up and about, and as Mubina said, in the last 2 trading days, nearly a 40% move. ONGC, meantime, anything but a spectacular move at the lowest point of the trading day. You believe, Kunal, it's a sell?
I think the stock has been showing continuous weakness in the last few weeks. There was this big selling, which happened on 2 days for ONGC, somewhere start of October, when the stock corrected from 180 to 150 levels, and even after a mild bit of rally, the stock failed to hold on, and now it's on the verge of breaking that key support of 145 as well. So I believe ONGC could be a shorting opportunity at current levels as well. 140, since it's a low beta name, so 140 is where I've placed the targets for ONGC sell, and stoppers to be kept at 153.
Alright, keep an eye out on ONGC. 153 is the stop loss. To number 8 then, and some of those paint stocks are holding out quite smartly. It's obviously, Vivek, the crude trigger.
Absolutely right, Avan. Asian Paints, Kansai Nerolac, both of these stocks, doing quite well despite the choppiness seen in the markets overall. Remember, one thing you need to understand is almost 40% of the raw material costs, as far as all of these paint companies are concerned, is mainly linked to the movement in crude, and a lot of paint companies have also recently said that they've been undertaking price hikes. So it's a double boost as far as paint companies are concerned. No wonder looking at Kansai Nerolac today up almost 3% in the session.
Alright, keep an eye out. That's Kansai for you, and the rest of the pack as well that's holding out. Sun Pharma, meantime, is looking a little bit weak in today's session. Of course, we do have an ET Now exclusive with respect to this stock, down about 3% in the current trading session. In fact, sources indicate that the US FDA has begun inspection yet again at the very contentious Halol facility. The pre-approval inspection of PAI is currently underway at the Halol facility. We have reached out to the management, but they have not still responded. But this has triggered as many ANDAs have been filed at the Halol facility. 510 on Sun Pharma. Let's switch gears then, and PFC is a stock that's seeing quite a bit of fervor in trade today. In fact, where do you see it headed, Sameet, and do you believe that the current level is a good buying opportunity or not?
So it's a hold from my side. Recently, we witnessed a good V-shaped recovery in this PFC as well as its peer counters REC. Since last couple of weeks, this stock has been consolidating in a range, but around to a 20-day moving average, we are seeing some kind of emergence of buying happening. So we expect at least this stock to head towards its recent high, which is around 108.5. So at this juncture, those who are holding long, they should stay put now. 98, 97, these are the important support levels to watch out for. One should stay put with a near-term target of 108.5.
Alright, those are some levels to map out on. The retesting, it could retest the levels of about 108. Moving on, let's get back to Pharma, Mubina, and talk about SPARC.
SPARC today is seeing some buying activity. Sun Pharma as well, of course, is joining in on that uptick that's coming in its subsidiary. Now, they did have some important remarks that SPARC made. They've spoken about the top-line results of the pivotal BE study for PICS. Now, PICS essentially is an important study that they have conducted. The study, according to them, meets all the required pharmacokinetic endpoints. The pivotal BE study shows that PICS is going to be a bioequivalent to Abraxane, and that perhaps is possibly a trigger for the stock price. Not to mention, of course, the Sun Pharma news exclusive that did come in. That as well may be an added trigger.
All right, lots keeping SPARC in focus. 277 is where it's at. Let's check in on the PSU banks as well, and OBC is one that merits a mention. Vivek, take us through. Oh, pardon me, I missed out a stock. At number 12, it's Tech Mahindra, down about 2%. Kunal, let's get in a take. What is the level that one should watch out for? There's so much going on with the currency, etc. Where is it that you're placing your position?
So, as compared to most of these IT stocks, even Tech Mahindra has been showing weakness. But, the case in point over here today, Avan, is that the stock has broken its 200 DMA. Now this is the second attempt the stock has broken its 200 DMA. The last time the stock managed to take support, but this time around when it's the entire IT pack which has broken its key support and the averages, I believe even Tech Mahindra could continue to show signs of weakness. And a fall below 200-day moving averages on long-term charts indicates a strong bit of bearishness. So Tech Mahindra could be sold into, I think 640 could be an immediate target range for the stock for anyone who's looking to short.
All right, that's the take coming in on Tech Mahindra. Meantime, now let's move on to OBC then. At 86, the stock is really feeling the heat in trade today. Vivek, what's the take?
Well, that's right. So the news that has been baked in as far as the stock price is concerned is the fact that the company is looking to divest stake in its life insurance joint venture, which is the Canada HLBC OBC Life Insurance. Remember, OBC holds almost 23% in this particular company, while Canada Bank has almost 51%, with HSBC owning the remaining 26%. However, today, you're seeing a bout of profit booking as the news that has been digested by the markets, but it's an important development to track because number one, this is mainly being taken by OBC as well as Canada Bank to basically adhere to the PSB capitalization norms, and which is why most of these companies are looking to pair stakes as far as their non-core businesses are concerned.
All right, that's something to watch out for in trade. That's OBC under pressure. Meantime, let's move right on and get in Cipla, and that's a stock as well that's in news today, the ET Now exclusive, and the stock has come off from the high point of the trading day now. We understand that the US FDA is going to start inspection of their Kurkum site. This is an API as well as a formulation facility for Cipla, and we've reached out to the company, though they have not still responded, but the US FDA is going to start the inspection. 515, that's where the stock is currently at. Well, let's move on then to number 15, and that is Arvind. What exactly is the next breakdown levels, Kunal, according to you?
The last 3 weeks, 4 weeks, we've seen a lot of the mid caps rallying. There were many stocks which rallied 15%. Some of them rallied even 20-25% as well from their lows. But Arvind, case in point, it had a very marginal rally. I think 7% rally, and was one of the fewer ones to give away when the market showed initial signs of weakness. And I believe that with the overall pattern bearish for the stock, and even the rally which is underperforming as compared to most of these other mid-cap stocks, I think Arvind could be sold into, and the weakness which you're seeing today could be an indication of what could lie in the next couple of days. So Arvind could be sold with a target of closer to 295 to 98 range, stop loss at 320.
All right, that's the take coming in on Arvind at 311. On that note, tell you what, let's take a quick break right here on the show. A whole host of other stocks coming up on the other side of Market Fatafat. Welcome back. This is Market Fatafat. A quick glance at the index, and we're at 10,492, down 0.33%. Well, let's get right back to the countdown then. And Samit, let's flag off IRB Infrastructure. Where is it the right time that you believe one can buy?
See, clearly this stock has been consolidating since last couple of weeks. It has stuck in a range of 144, 145 on the higher side, and lower side 140 has been acting as a support. We believe that once this stock surpasses 147, it could trigger some good positive momentum in this counter, so that could be a confirmation of a breakout as well. So one can go long once this stock surpasses 147 for an immediate target of 158, and in that case one can keep a stop loss around 140.
All right, check in on IRB Infra, that stock in focus. Moving right on, Mubina, it's the OMCs as well that are in focus today.
Well, naturally, given the massive drop we witnessed in oil prices, OMCs would be beneficiaries as they were back in 2016-17 when oil was averaging about $40 to $50 per barrel. And do remember, the last couple of days we've seen a massive uptick come by in these OMCs. The likes of an HPCL has rallied 45% since the 4th of October when the news with respect to the excise absorption was announced by the government. One had almost written off these OMCs after that excise absorption, and especially subsequently we did see the rally of Brent as well to a level of $86 per barrel. But how things have changed, and just in these last 5 odd weeks we've seen a massive 20 to 45% rally between BPCL, IOC as well as HPCL of an uptick come by from those lows that we hit of 2006 and 2007. So yes, it's certainly been almost a one-way journey upwards for OMCs.
Okay, keep an eye out on all of these OMCs, and yes, there has been a one-way ride and that has just been upwards. Moving right on, what a phenomenal move we're seeing in Hotel Leela, Vivek.
Well, that's right. Anytime you are talking about a PE investor looking to buy stake into any particular company, especially if it's going to be at a premium, you can expect this kind of a move. So basically, what the news is that a Thailand-based company called Mahindra International, and it's going to be a consortium along with Trinity White City Ventures. They're looking to invest almost close to 2,500 crore as far as Hotel Leela Ventures is concerned, and this is something that sources have told some of the agencies. And on the back of this, if you look at the stock today, perched at the upper circuit, and it looks as though if the news does come through, this rally could continue for some more time.
All right, that's something to keep an eye out on. Hotel Leela is really having a rollicking session. Mahindra International plans a majority stake in the company. Meantime, take a look at JSW Steel. In fact, this has been a newsmaker this entire weekend, and of course you're seeing the stock in focus today. This is with respect to the company submitting its bid in order to acquire another company. In fact, what we understand is that this is the company has submitted an expression of interest to buy bankrupt Asian color-coated SPARC. It is the only steel company that has seemed to envisage interest in order to take over ACCIL. There are other players like JM, Apollo Global, Bain Piramal joint venture as well that have submitted their expression of interest for ACCIL, and JSW is keen to buy downstream steel assets after taking over Mother SPARC. The stock though down about 2% nearly in today's trading day. Moving right on then, let's pull up Kajaria Ceramics as well. Let's understand, Samit, what are the important targets and stop losses that you have on the stock?
See, clearly there has been a V-shaped recovery witnessed in this counter ever since the stock made its new 52-week low of 310 on October of 25th. Since then, the stock has already rallied more than 30-40%, and still, if you look at the daily chart, the stock is likely to continue its northward trajectory. So, in our sense, one should stay put. Those who have been holding this, longs in this particular counter, they should stay put. Now they should trail their stop losses around 440, which seems to be a near-term support, and we would expect the stock to heading towards its 200-day moving average, which is placed in the zone of 480-485.
All right, that's the take coming in. Recently witnessed a V-shaped recovery. Moving on, at number 21, it's Cochin Shipyard, Mubina, and that stock as well is in the news today.
That it is, and this time around it's on the news of the buyback that has been announced by the company, the details of which are, as I say, the board has approved a buyback. This is in total of about 200 crore rupees. It's approximately 45 lakh shares that they are looking at buying back, and the amount that has been approved is 455 rupees. So that's a 70 rupee notch up from where the current market price is of 388 rupees. 455 is what the buyback price is, and that's the reason why you're seeing this uptick.
All right, 2.8% and counting. That's Cochin Shipyard. Meantime, it's Suzlon that is finally on the radar yet again, but not for right reasons, Vivek.
Well, that's right. This penny stock is only going one day and is going lower as we speak. So some of the rating agencies have gone ahead and have had a look at the company's balance sheet, and what they're saying is that they've actually gone ahead and revised their rating on the long-term bank facilities that is being provided by the company. Remember, again, this is something that's been on the radar for a lot of these companies. The rating has been revised to BBB negative, and the outlook too has been kept at negative. So as far as Suzlon is concerned, no positive news flow coming in from any of the rating agencies at least.
All right, that's the word coming in. 5 rupees stock now, and the news is only getting worse. Let's move on then to a marquee name that I'm sure a lot of people have in their portfolios, and that's HDFC Bank. So Kunal, what's the take? This one a keeper?
So yes, when you look at the internals of the market, there is a definite sign of churn which is happening, because on one hand you see weakness in a lot of the IT and metal names, but names like HDFC Bank and even Reliance to a large extent, these stocks are holding on. HDFC Bank, case in point, is on the verge of a swing breakout. It's above its 250 DMA, and this strength or the slow and sturdy strength that the stock is showing indicates that there could be more upward traction for the stock in the next couple of days. So HDFC Bank could be bottom to at current levels. 2075 to 2100 could be near-term target levels.
Even now is a good level to buy. That is what Kunal is saying on HDFC Bank. Watch out for 2100 on the upside. Oil India, meantime, is another newsmaker, and that's largely on the back of the fact that the company is going to buy back close to 4.45% of shares. The price point is been fixed, and this is going to be for close to 1,085 crores. Moving on then, Samit, let's talk about tire stocks. MRF, where do you see the stock headed?
See, clearly this stock has been, outperforming its peer counters. If you look at the CR, Apollo Tyres, they have been not showing any kind of strength, but at the same time, MRF since last 3 days has been giving a good move. So, if we look at the overall daily chart, this stock is now poised for a decent up move from current level as well. So, it is clearly heading towards the 200-day moving average, which is placed around 71,000, 72,000. So one should, stay put, and on the lower side, on the high side now 70,000 to 71,000. These are the next level to watch out for. So, as a momentum trader, one should trade with a positive bias. Any minor dip would be a good buying opportunity.
A minor dip is a good time to enter into MRF, now staring at 70,000. BEML, meantime, it's an order win, Mubina.
That it is, and that's something that's propelled the stock higher today, and trade is backed up more than 3,000 crore rupee worth contract for the Mumbai Metro corridor, and this is something that's causing a massive up move in the stock price. 3,000 crores, that's quite a massive order win by the company.
And 2% higher on the stock. Well, with that, at 26, number 26, we're out of time. So thanks so much for watching. Stay tuned. We've got the next session coming up at 1:30. Up next is Market Signal.